Now he's achieved a percent. He's above the percent. Okay, so he's just crossed above the 1%. He has had a larger drawdown though. Okay, so his drawdown has been 1.79%. For the month, it's up 0.46. Yeah, so he's, you can see sort of, again, he's only started with us, his funded account in April. Okay, so sort of, 7th of April. When he took his sort of first few trades or first trade, right? And at that point, not doing so well, taking it easy, and then all of a sudden we have a bit of a drop, and then he gets back to sort of almost break even, another little drop, back to break even, and then maybe he increases risk. It'd be good to know sort of what happened there. Sort of he's close enough down to these lows of the hair now, around 1.6% loss. He makes a bit of a recovery, almost comes back to sort of that loss again, but at this point of a hair, he's done something there, right? You can see sort of the uptrend occurring now. Okay, so he's recovered and added some. Okay, balance. Yeah, so you can see sort of this is where the balance is now. Looking at profit. Yeah, so another trader who. Okay, so this is a great example of, similar to what I just spoke about increasing your risk. It could go against you as well, and this is what happened to this trader here. So you can see initially very small risk, and we generally give you that guidance when you're first starting out. We don't want you to get into a very large drawdown, so take it easy. Reduce, go through the incubation rules that we set up, and that's what he's done here. And then at this point, he's hit a bit of a drawdown, he's hit a bit of a block, a bit of a wall, and he starts to increase his risk. One of the trades worked in his favor. So the first trade, he increased the risk, it works in his favor. Yeah. At that point, the next trade, he's given away all the profits that he made in that first sort of increased risk trade, right? And then he comes back. You can see sort of he reduces his risk. Then again, he ups the risk, gets back above. But then at that point, that's it. He starts to give away his profits, and then he takes on these larger losses of the hair, right? And then he reduces his risk in this region here. I'm trying to sort of stay away from that. He reduces his risk in this region over here, and then he starts to up his risk, but then now it's worked in his favor. So it will be great to have that conversation with him and sort of speaking. What's the difference in this area in comparison to this area when you increase the risk? Yeah. So it generally is often a mindset. Okay, so it's the mindset that you have as well. Something that I probably sort of something that just popped in my mind is probability of setups is also very important, which means that if you have, in a day, if I'm looking at the market and I'm looking at, say, 6 markets and I see 3 trading setups, do I take all 3 trading setups? Or if I find that 1 out of the 3 has the highest probability, let me allocate my entire risk to that one asset that has the high probability? I'd rather do that, right? So, looking for high probability setups, not just average setups, is also important, right? Having a good confirmation, confluence of indicators to give you your high probability setup. Something to take a note of with this trader is the fact that he does have a very low hit rate. So for someone that is up and he's at new highs with his equity, he does have a very low hit rate. That's not a bad thing, right? That's not a bad thing. If you've got a 23% hit rate here, but then you've got to be looking to achieve a minimum of 3-to-1 reward to risk ratio when you trade as well, right? So look for higher reward to risk ratio setups. So that's what I'll be looking for. Or work on ways of improving your hit rate. And as I mentioned, increasing the probability of setups, taking less trades, focusing on the higher probability setups. Okay. Profit factor above 1 as well. Just looking at sort of, best trade, worst trade, that's okay. Yeah, just that's the only point of concern I have for this trade is the hit rate. Looking at this 3 months over there. So the first month, down slightly. Second month, down a bit more, right? And then this is where we've seen the recovery occurring. Okay, and the majority of his focus has been on Bitcoin, and he's got a great reward to risk ratio. So even with a low hit rate, he's got a very good reward to risk ratio. Now I would question how much of this, right, is luck. How much of it was that because we've seen a bit of a large amount of the profits coming from one asset at a specific time period, how much of that is down to your skill, or is it down to sort of market conditions and a bit of luck, right? To sort of refer back to that, he has taken over 2,000 trades. He has taken over 2,000 trades as well.